Excel Accounting Practice Problem. Bank Reconciliation, Month 1, Part 1. Get ready, because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time, the example tab in essence being an answer key. Let's take a look at it now. We're going to be doing a bank reconciliation, so the focus, of course, will be in on the checking account. We're going to have our mock bank statement looking like this that we will be using to reconcile with. We will be reconciling both January and February, focusing in on January this time, even though we have entered 2 months of data thus far into the accounting system. The bank reconciliation, we're going to put all the way on the right-hand side, way over here. We're going to try to do the process of the bank reconciliation similar to what you might see in accounting software, taking in essence our book information and comparing it to the bank statement. And then we'll also kind of mirror what you're more likely to see in a textbook type of problem, so we get kind of a more well-rounded picture of what's going on here. Notice that if you're doing accounting software or using accounting software, people oftentimes, because the bank reconciliation process is set up to work quite well, but in kind of a systematic way, we often confuse the process of reconciling with what a bank reconciliation is. The bank reconciliation, in essence, being that last report that will be creating, reconciling our balance with the bank balance as of a certain point in time. So let's go back on over to the practice tab. We're going to do the reconciliation as of the end of January, because this is our bank statement. So this is the information on the bank statement. We got the beginning balance, we've got the additions, we've got the subtractions, we've got the ending balance, and then we've got our deposits and the checks and other decreases in the detail on the bank statement. Let's go back to our worksheet then. So we're going to go all the way to the right so that we can then start to construct where we're going to put the bank statement. So let's go all the way to the right here and give us a little bit of space so that we can work this thing out. And we'll put it right before the balance sheet. So I'm all the way over here in GX. I want to take this skinny and I'm going to go from this skinny all the way to the right. Let's take it all the way out here to HL. And then let go, and I'm going to insert some columns, right click and insert some columns to give us some space. I'm going to try to unformat it now. I get this little paintbrush up top. I'm going to unformat, click in the paintbrush, clearing the formatting so that I can then format the way I want. If you don't have that little paintbrush, you can click on a cell that's a blank formatting and basically use your paintbrush to format the whole thing. And I'm going to right click, format the thing. Let's format the cells the way we want it to be formatted. Currency, or at least this is what I'm going to choose. You don't have to do the same thing, but this is what I'm going to say. I'm going to say no decimals here. And there we have it. There's our standard formatting I've been using. I'm going to get rid of I'm going to bold it too. Everything is bolded. All my work is emboldened. And then let's take this skinny over here and put that skinny right there. So there we have our worksheet to work with. Now the first thing we need is the information on our book side of things so we can compare the books to the bank statement. So normally we could go to the general ledger to do this. If you were doing accounting software, the software would basically pull that data in from, in essence, the general ledger as you put the data into the system. So, but if I go to this worksheet and I go to my GL, I'm going to have a problem. Let's take a look at it just so I can show you the problem that we have. If I go back on over here, and we're going to pick up the checking account. We closed out, you'll recall, the beginning balance and lumped it into this number here. And then we only have the detail for February. So what I'm going to do is I'm going to jump back into our prior worksheet over here. And this is the last worksheet we had for month 1, where we have all the checking account stuff that we need. That's the one we want. So here's our detail here. I'm just going to copy this entire GL account. I'm just going to copy the whole thing, copying that. And that's going to be our start, like our basis, the detail that we're going to compare item by item with what is on the bank statement. That's what a bank reconciliation in essence does. So let's go back to our other worksheet now. I'm going to go back on over here. I'm going to go back to the right so I can paste it. So I'm going to paste it kind of specially here because I can't paste it just normal because it's got formulas in it. So the pasting procedure will then be first pasting it 1, 2, 3, right click. I'm going to paste it 1, 2, 3. And then I want the colors and everything in there too, the formatting. So I'm going to right click and paste it again with just the formatting. I'm going to paste the formatting. And that way I get the numbers and the formatting. The running balance over here is now hard-coded. As you can see, there's no formula. So I'm going to re-input the running balance on the right-hand side, which is going to be the 25,000 plus the 65,000. And I'll just copy that back down. So I've just recreated the general ledger up through the end of the first month, the end of January. It ends off at the 88,811. That 88,811, of course, is the beginning balance. If we go back to our GL in this worksheet, because we adjusted that to be our beginning balance, let's just double check that, the 88,811. So there we have that. So now let's go all the way back to the right, and I'm going to construct our worksheet as you might see it kind of in accounting software when you go through the bank reconciliation process. So I'm going to make another skinny column over here. And what will typically happen, I'm going to make this column a little bit wider, is we will have a beginning balance, and I'm going to call it a cleared balance, meaning the balance that cleared the bank statement, and that will typically tie out to the prior bank statement balance. So you would think that that balance should be the 30,000 here, and it typically will be, but sometimes you have a problem in the first bank reconciliation. And so we'll kind of go over this beginning balance problem. You'll see this in accounting software. You'll see it in, whatever system you're going to use, and possibly we'll get a better concept of what that is doing this in a worksheet. So I'm going to put this one cell more out to the right, and I'm going to say instead of that 30,000, I'm going to pick up this 25,000 because that's the beginning balance I had in my worksheet at this point in time. So I'm going to recognize right now that I have a problem here. I've got the 25,000 in my worksheet versus the 30,000 that is on the bank statement. So I have a difference, of course, of 5,000. So we'll see how that kind of plays out. And so then typically what you'll have is you'll have two groupings that will be kind of checking off the activity that has cleared both the bank statement and your books. You're going to have the deposits, and then you're going to have the checks and decreases. So I'm going to say these are going to be the cleared activity, cleared deposits that we're going to have. And all we're going to do is match out then what is in our checking account. We'll just check it off to what is in the bank statement. So the idea being, if we had the same starting point, which we don't this time, and we'll get into that in a second, why that is the case. It'll work. We'll talk about that later. But if we did have the same starting point and we checked off all the activity in both sides, then we have something that reconciles. Then we'll get to the same ending balance. Whatever is not checked off then is going to be the differences between our books and the bank's books. The difference that we expect to see in our books versus the bank books is that we have some transactions that we have recorded that the bank has not yet due to timing differences, those being outstanding deposits and checks. So this process we would do here is the process of reconciling to determine those items that are going to be outstanding checks and deposits. And if there's something on the bank statement that's not on our books, then that's probably something that we're going to have to add to our books, things like possibly the withdrawals at the bottom and the bank service charges, as well as any other transaction that we think is correct, meaning the bank most likely would be right, and we just haven't entered it on our side because we didn't know about it, or possibly we made an error. Or the bank could be wrong, in which case we would call the bank and try to talk to the bank and say, hey, you got something wrong here. But oftentimes, we're doing this to get our books to be more accurate. Oftentimes it's not the bank that is inaccurate. So we're going to then go back on over and say, let's do this. So we're going to say the first one, I'm going to check off, let's do the deposits. I'm going to say the 65,000. I'm going to make that highlighted here. And I'm going to say that I see that right there as well on 1-1. So how can I format these? Let's format this. I'm going to paintbrush that over here. Paintbrush it right there for the date format. And I'm going to just pull that over on 1-1 and say we've got then the 65,000. I'm going to copy this formatting down. Copy the formatting down. I'll delete the actual dates in it so that we get a couple more of these. And so we got that one. I'm going to make this one green then. Let's greenify that one. We found it. And then we've got this next one. And notice you're usually going from the bank statement to the book. So now the next one is the 50,000 here, because I expect to see some stuff on my books that's not on the bank statement. And everything on the bank statement I expect to be on the books. So I would usually want to go from the bank statement to the books. So we got the 50,000 here, and there's the 50,000 there. So this is going to be on 1/1, and this is going to be the 50,000. Also note that we would expect the dates on our books to be before the dates on the bank statement, because the dates on the bank statement, they didn't know about it until it cleared the bank. The deposits should be fairly close in time range, because the deposits shouldn't take that long to clear. So you have the dollar amount of the deposit to help you out, as well as the date can help you out as well to some degree. If you don't have your deposits, however, in the same ordering as we talked about with the use of the undeposited funds as is on the bank statement, you could see how that would become a lot more complex. So this bank reconciliation process should be an easy thing to do. If it's not, if you find yourself trying to tie together certain things on your books to match the bank, then you've got to go back and see your accounting process would be the best thing to do generally, possibly looking at your credit card company to see how they're grouping things to make the deposits, possibly then thinking about how you're making deposits of, say, cash transactions, for example, in your bookkeeping side of things, do it in a way that can match the bank. So let's go back on over. We're going to say then we want the 7570. I'm not dealing with the pennies here, so they could be off by some pennies, but we're going to say it's right there. So there is that one. So this is going to be, I'll just pick up the date here, and then the amount, which is the 7570. And then we've got the 20,500, 20,500. That is going to be right here. So that looks good. We will pick that up at the 20,005 on 121. This will equal then the 20,500 there. So there we have that. And so that's all we have thus far. I'm going to leave a couple spaces in case we need to make any changes to it. And I'm just going to call this total cleared deposits. And I'll put this in the outer column. Let's indent this one. Let's put this in the outer column equals the sum. And I'll pick up these blank cells here just in case I have to add anything. There we have it. Now you'll note that over here I have another deposit that didn't clear the bank statement yet. It's not on the bank statement. And that happened close to the end of the month. You would think it would have cleared by the 31st. But we can check if it has cleared by looking at the February bank statement to see if it has cleared. And if it has, then we're saying, okay, it's an uncleared transaction as of this point. So we could check that. That would be a use of the bank statement. But what we really want to do also is determine what exactly the change is in terms of timing differences, so that we have a reconciliation of the bank's books and our books. And by doing that, we've double checked all of our checking account numbers. And by double checking all of our checking account numbers, we've also, to some degree, double checked the other side of the transactions for a double entry accounting system, given that cash is the lifeblood of the company flowing through all other cycles: revenue cycle, purchases cycle, employee cycle, payroll cycle. That means that we have a much better check on everything else that's going on as well. So let's go to the second half there, which is going to be the checks. We're going to say these are going to be the cleared checks and decreases we'll call it, and colon. So now I'm going to do the same thing on the other side. We're just going to go through all these. We've got the 12,000 up top, 12,000, and if I go back on over here, let's do it this way, 12,000. There's the 12,000, so I've got that one. And let's pull that one in. Now notice on the check side of things, I'm gonna highlight, paintbrush a few more cells down here. You might have the check number if you're actually issuing checks. And if you don't have the check number because it's an electronic transaction, then your date will be more relevant. In other words, if you have checks, the date's going to be more irrelevant, given the fact that it takes longer for the checks to clear. So the distance between the check that you enter versus what clears the bank could be quite substantial. If you have but you have the added checks to help you to check off and reconcile the check numbers. But if you have then transfers, electronic transfers, you won't have that added check number to help you to figure out which is which. But you do have, in that case, you do have the date, which should be more relevant within like 3 days you would expect on an electronic transfer. So we're going to say this is going to be equal to the 126, and this is, let's make this, I'm going to make it a negative so everything's a positive on our sheet over here. Now these two are going to be a problem for us because, and this is, notice this adds up to that $5,000 difference. So these two are two items that we don't see on our books. And we'll talk more about why that will be once we do the kind of like once we reconcile this thing. But in essence, the reason that's going to be is because those were uncleared transactions as of the last accounting system that we started. And when we put our information in, we put it in as 25,000. We had those outstanding checks that didn't clear the bank last time that are this time. So I'm not gonna add those quite yet. I'll leave those as greenified, and I'm gonna say, oh yeah, there's a problem there. We'll go back and figure that out. So then we got the 16,000. 16,000 is going to be, where's the 16? Right here. We did the 12. Here's the 16. Let's make those green. This is going to be equal to the 19. I'm going to say negative of that 16. And then we've got the 7,000. So 7,000 will be here. Let's make that yellow and say 7,000 is here. I see that one is right there. Negative of the 7,000, making that then green. And then we have the 6892, the 6892, which is right there. So I see that. Let's make that yellow, yellowifying it. And then this is going to be equal to the 6892, negative of that number, making this green because we found it. And then we've got the 72. 72 is right there. Okay, so let's say this is going to be equal to the 72, negative of that number, making that green. Going back on over, going to yellowify this one, making it yellow. Then we've got the 3780. There's the 3780. So we've got that one on 114, 3780, negative of that number, picking it up. We're going to greenify that one. So we've got that. Going back on over, let's yellowify this one. And then we've got the 12,000. 12,000 is going to be this 12,000. We had two 12. I highlighted this one twice. I highlighted it last time. 12,000 up here. Did I have two 12,000s? Yeah, two 12,000s here. I think I highlighted it twice. I think this one I shouldn't have done last time. So that we're gonna, this 12,000 should be coming from this 12,000. There we go. And this is only going to one place, right? That's going there. Okay. So then this one is going to be this 12,000. And so we got that. And so that mistake was made on purpose to show you how you can kind of figure this out as we go. And then the 620 is going to be that 620. So there's that. This is going to be equal to the 620. So we'll pick that up. And this is going to be negative of that 620. And then we'll yellowify that. Yellowify that. And then we've got the 15,000. 15,000 is here. So there is that, and we've got this one on 626, negative of that 15,000. I'm going to skip a couple lines here again, and this is going to be then, because that's the last one that we see. In other words, I'm not going to see these two down here, the 150 and the 15, because I don't have the withdrawal. I didn't enter the withdrawal, and I didn't enter the service charges because I didn't know about them. And these items are on our books, but they didn't clear the bank yet, which I expect to possibly be the case because they might be outstanding items. I can check to see if they have cleared in the following month, which we will see shortly as we do that, because usually when I do the bank reconciliation, it'll be sometime after the month, far after the month. So I can check the following month in February. But I really just want to see what those outstanding items are, not just so I can check on them, but so that I can reconcile the whole thing, giving us that double check on everything that has been entered into the checking account. So I'm going to call this total. Let's copy this down here and put this down here and say this is going to be total cleared checks and so on. And then I'm going to sum this up equals the sum of these items. So there we have it. And then we'll call this this is going to be the cleared balance, which would be equal to, we're going to say, and there's going to be a problem with it so far, but this is what we have thus far, this 25,000 minus or plus the deposits, minus the checks and other decreases. That would be our cleared amount. The bank amount, bank ending balance, comparing it to the bank, is at the 61,241 or 242, let's say. So 61,242. And I know I should do this to the penny, but again, we've rounded a lot of stuff, but so we're not doing it to the penny. So this minus this then is going to be that 165. So this is the difference of the 165, and that 165 is the 150 and the 15. Now, as we look at this, you might say, well, wait a second, something's weird here, because I started with 25,000 instead of 30,000, and I didn't check everything off, because those aren't the only other things I didn't check off. I didn't check off these two, the 5,000, and you could see those two in essence net out, right? Meaning my beginning balance was off by 5,000, and then I didn't check off these two right here, which I should have for the 5,000. That's basically what our difference is. So those two errors in essence are netting out, so that you can, and that's often the case in the first bank reconciliation. I'll try to make that more clear in the following presentation. We'll continue on. Let's just do some formatting for now. I'm going to format this. Let's make it all blue and bordered. Make it blue and bordered. If you don't have that blue, it's down here. We're going to go to this blue right there. And then let's make this blue and bordered. So there we have it. And so that looks good. So that's what we have thus far. That's kind of how the QuickBooks software will work. Now, again, we'll fix this, we'll adjust this, and we'll try to say, okay, what are we going to do with these beginning balance difference? What is that, and how can I kind of think through that in my bank reconciliation? And then what do we do with these items down below? Now, we'll also think about it as you would probably see it in a book problem, which would be to make the comparison between our books. So we'll do a side-by-side book balance and the adjustments, bank balance and the adjustments. That's not what you often see in accounting software, because they usually set it up kind of like this, which is a little bit easier when you do a database program. And then they create the bank statement. And any book adjustments that we have, which would include these two items, we would just have to enter into the system. We would just have to enter them in. So we'll talk more about that later. We'll talk about the beginning balance. We'll do kind of the more format that you would see in a book problem, and then we'll actually enter the transactions and the adjustments that we will then have found, including the bank service charges and the withdrawals, into our system with the journal entry.